Bob, you and I have never, ever seen this.
It's amazing.
Why is this happening?
Because good news is good news, bad news is good news, and no news is good news. You buy stocks.
But you buy stocks, but we had a guest earlier who said the structure here is what's changed. The retailization is Barry Eichengreen would say the financialization of the system is different when you and I had a Standard & Poor's Outlook book in our hand.
That's fair enough. There are a lot new buyers that have significant buying power and volume power, if I can use that term. Individuals, young people, hedge funds, quantitative tools. So the traditional quote-unquote investor that looks at companies, we're shrinking, Tom, as a percentage of what's going on.
So what do you think is driving just kind of market trends here? Is it maybe just momentum, trend trading? Is that becoming a bigger part of it?
All the above, Paul. There's no question about it. But look, let's be fair. Prior to this war, the economy was pretty good.
Yep.
Earnings were better than pretty good. This war has been brief, and if it really is over or close to over, we'll go back to those tailwinds, and that's what the market is focusing on.
So one of the big themes has just been, AI, and I'm not sure. I think when this war winds down, a lot of those themes are going to come right back to the forefront again. AI, private credit, those types of things. What are you focusing on?
You're absolutely right. Look, let's be short-term for a minute. Earnings have just started.
Yep.
So far, so good. I talked to a lot of analysts during the war, and they said, I don't know what to do with my estimates. I'm going to wait because the company's going to report in a couple of weeks, see what they say about the first quarter and projected going forward. Then I'll deal with my estimates. My guess is there's some nicks out there, and estimates have to come down a bit. I don't think it's a disaster, but enough to be a little worried at 21 times. Yes, down from 23 times and up from 19 times, but I'd like a lower multiple with all this uncertainty.
A brilliant adult scattered out chart. This is Matt Sermonaro with Zero Hedge Help. Thank you for it. Their marketeers, a real good compendium of what's going on out there. Since 1928, when the S&P is up like this, 5% first 15 days of April, the market is up 32% on average the rest of the year.
Where do I sign?
Yeah, where do you sign? Bob Dahl, you and I know it's just not that easy. And I'm going to go to, and frankly, James Cramer over at the Death Star has been very good about this. In time immemorial, the answer is very few stocks drive us higher. What are those very few stocks in July or in October?
A great question. Of course, I don't know for sure. I do observe in the market the last couple days, as we've moved now to a new all-time high, breadth has been pretty mediocre. It's not convincing. Now, I'm not going to poo-poo a new high. Believe me, I love it. But I think you're going to see some of the technology stocks, software coming back from the dead. Yeah. I don't think the semis are over. They need a correction. They're going through that right now. And I think that we'll see then other cyclicals do reasonably well as long as the economy is okay, which it is.
Joe Weisenthal saves Bloomberg surveillance today. Thank you, Joe, with a tweet out with outlets. U.S. jobless claims 207,000 in April, 11 week. The estimate was 213, so they came in better, more optimistic than expected.
Yep. So, it's interesting, Bob. I mean, coming late last year, kind of into this new year, we had a rotation in the marketplace, getting out of some of those high multiple names, high growth names, into some value, some small mid caps. How do you see that playing out these days?
I think that will come back.
Okay.
Value tends to do better when growth's pretty good, and growth seems to be pretty good. Look, the trade around AI got concerning. First, it was we got all the money we need in cash, and then we'll give it to you in equity. Then we'll raise fixed income to do all the capital expenditures. Post Labor Day, it was kind of trust us, we'll find it somewhere. The Oracle AI deal, I'll never forget. That still has me concerned. I think some of those CapEx numbers have to come in.
Is the use of cash? I mean, when was the last time Lisa? Oh, you weren't here, Lisa. Excuse me. Lisa Mateo with us today for Alexis Christoforous. Bob Dahl, I look at this and I'm just saying to myself, it still comes down to CFA 1, 2, and 3, which is revenue growth, down the income statement, cash generation, and use of cash. It's not broken, is it?
I totally agree with you. People are not spending enough time, in my judgment, focusing on cash flow, use of cash, price to cash flow, price to free cash flow. These are the instruments that will get us through.
Is this bond issuance, Merton Modigliani, Dahl nailed this, the Pennsylvania schools.
In 1928, was it?
Yeah. Remind me, which school were you at near
Lehigh.
Allentown?
Yeah,
Lehigh.
don't make that mistake.
I mean, I'm sorry, Lehigh. It's like the home of Stephanie Rule, right?
I think so, yeah. But you can't get them mixed up. The Lehigh.
Can you imagine Stephanie Rule in the student union at 10 a.m.?
No.
After calculus class?
Yep.
Too much. Bob, out of Lehigh, you studied this. Is the bond issuance an alternative to use of cash? To me, a portion of it is.
No question about it. I agree with you, but I come back to it's just not where the cash is coming. It's free cash flow and the growth of it. I try to run portfolios that have price to free cash flow that's well below my benchmark and ROE above my benchmark. That trade-off tells me I've got quality and I've got growth. And if I can do that in combination, I think I win in the long term.
What screens well for you under that scenario these days?
Financials.
Okay.
I mean, look how much they've been pummeled since the first of the year. Yeah, they had a great year last year, so they gave some back starting toward the end of last year. The numbers so far are pretty good.
Yeah, they are.
I would, on this weakness year to date, add to my financial position.
Bob, I got to bring this up, and I'm going to do it with you, and it's such a great honor. We lost Mark Mobius at a wonderful age of 89 for John Templeton and John Galbraith years ago. He invented emerging market analysis. You used to be, Paul, you're too young to remember this. Bob and I remember emerging market investment was by the telephone company and by the concrete company. And then you moved on to Anaconda Copper and Johnson & Johnson. Mark Mobius changed the language of what we do.
He sure did. Look, the planet in the developed world is not growing in population. So if the planet's going to grow, the emerging market consumer has to carry the day. And I think that's a great long-term play. Yeah, it's volatile. You have to have your seatbelt and shoulder harness on. But if the emerging market consumer does not buy stuff, the planet's doomed because population shrinking. China, Japan, we're not too far from that.